This video would have been a video on how to know exactly what you'll be risking in a trade, the risk management video, but scrap it. I'm not going to be teaching risk management. You can go get the forex course if you want to know about risk management, to know exactly what you'll be risking in a trade. Let's talk about the basic technical analysis for beginners. Basic technical analysis for beginners. So just like you already know. Okay, you don't already know because you're a beginner. So the first thing they usually tell everybody is your market structure. Your market structure. Although, as you can see, when you learn about market structure, it's not usually what they teach you, is what you see. But then you're still gonna learn it and have an idea about it. So we're gonna start from our top-down analysis. When you're doing top-down analysis, you start from your weekly time frame, just like I showed you guys this D here. This is where you change your time frames. Time frames is you seeing the market in different times. This one D is seeing the market in daily. Each candle here is a daily candle. Monday candle, Tuesday candle, Wednesday candle. Each candle here is 1 day candles. Alright, so if you switch it to weekly, each candle here is 1 week candle. 1 week, 1 week, 1 week. So what happened the whole week is just printed inside 1 week. So each candle here is based on one week. The next time frame there is the 4 hours. So each candle here is formed and closed after every 4 hour. 4 hour, 4 hour, 4 hour, 4 hour. So this the 1 hour time frame, each candle here is forms and closes after each 1 hour. Each 1 hour. This candle after 1 hour, the next candle after 1 hour, the next candle after 1 hour. Just like that's how it is. 1 hour. So that is it about time frames. So when you want to do your technical analysis, you want to check from the daily time. What is the daily time frame saying? Are we in an uptrend or are we in a downtrend? Is the market moving up? Is the market going up or is the market going down? So as you can see, the market is moving up. When the market keeps creating higher highs, like this, you know the market is an uptrend. I don't want my chart to be dirty. So the market keeps creating highs like this. The market is in an uptrend. The market keeps creating lower lows like this. Market keeps breaking lows and going down. We can say the market is in a downtrend. So in an uptrend, you want to look for buys. In a downtrend, you want to look for sales. See that? So when you look at the daily time frame, you go to the 4 hour time frame. You go to the 1 hour time frame. So some of you might be asking now, how do we look for buys and how do we look for sales? For just beginner and basic concept, just gonna be going with the popular strategy, the supply and demand strategy. Supply and demand strategy. When the market breaks a high like this, traders mark out the last candle there that caused that break to the upside, then wait for the market to come back and tap into that zone, and the market to move up again. You mark out the zone that caused the break again, market comes back, tap in and move up again. This is basic strategy for trading the market. For you to understand it, you have to backtest and practice what I'm teaching you. All right, whenever you see the market goes up like this, comes, goes up. Now we have a structure here. Market has given us a structure. This structure, market gave us that structure there. So this market went up, then broke that structure. Remember what I told you guys? When the market starts moving down like this, when the market starts breaking lows, what will you do? You mark the candle there that caused that break of a low. The market comes back, tap into that place and dumps again. That is what happened there. As the market has broke this low that we have here, market came up, broke that low, then the market came up, tapped into the POI there. Let's mark the candle there that caused that shape. Mark it. You see how the market came back nicely, tapped into it and started dumping. Came up, tapped into it, dumped, and that is how we started having this downtrend. And then now that the market switched to an uptrend, the market broke high. Remember what I told you guys, when the market starts breaking high, when the market breaks a high like this, market breaks this high, traders mark out the candle that caused that break there. Market comes back, tap into that zone and continue the movement. That is what happened. Market was going down, and then it went up. It came down to the candle that caused that break to the upside, tapped into it and moved up. My signal group is printing heavily. Signal group is for traders that don't have time to trade, or you just want someone to help you make money while you learn how to analyze, or you're not really good at analyzing. You can join a signal group like mine where we drop trades and you just enter and make money. So let's continue. So you see the markets came and tapped in nicely and moved up to the upside. Let's check GBUSD. Yeah, same thing. This buy that I marked out printed. So this is basic. This one too. This is a breaker. Let's just touch breaker strategy before we move on. Let's just touch the breaker strategy. So I had a breaker strategy here. So like I told you guys, what I just taught you guys was this one. This market structure, market coming down to the candle there and goes up. Why I don't want to teach you guys another strategy is so that it will not overload your brain. Alright? But then most times when the market moves up like this, market does not come back to that candle again. Market comes back to this high that is broke. So the market will do something like this. So the market will just do something like this, and let me remove this thing, guys. So when the market goes up and breaks a high, the market doesn't come back to that zone, to the candle that broke that high. Instead, it comes back to that high that it broke and move from there. I getting what I'm saying? I didn't want to touch this. This is I'm going to touch it when I start switching on strategies. But then just a basic, so you understand. And when the market is breaking low, when the market breaks a low, market doesn't come back to the last candle that broke that low. Instead, it comes back to that low that it broke, touches the low, and moves from there. Just have that in mind. So you have your normal supply and demand. Market comes and fly. Market comes and fly, and you have your breaker block strategy that market breaks, then comes back to the breaker and moves from there. From the breaker and moves from there. This trade here, I cut it with the breaker and also the candlestick strategy I'm going to teach in the next couple of videos. So let me use AUD to teach you guys a little bit risk management, just small, because I said I'm not going to teach you guys that. So when you mark out your zone like this, when you mark out a candle like this or somewhere like this, you click on the pencil icon, click on measure, then you want to measure from the beginning of the rectangle to the end of the rectangle. That's how many did you see? How many are you seeing? This is 26. Are you seeing the 26 there? That means this zone is 26 pips. 26 pips. That means your SL, your stop loss, that's how much you want to be risking, is 26 pips. Now let's say we want to risk $5 based on this 26 pips. Let's go to our pips calculator. Go to your Google, type in pips calculator, comes to this cashback, the cashback forex. It's usually a simple tool for you just analyzing and for you checking your risk. Check. So AUD instrument, search for the instrument AUD, put the pips, 20 pips. So from the lots, we want to check how many lots that will give us $5 risk. If you use one lot, that's $200. If you use 0.1 lot, $20. We want $5 risk. If you use 0.01, that's $2. We want $5 risk. 0.03, $6. Okay, 0.04, 0.02, $4. So you just use $4. So when you enter your MT5, click on the plus sign like I've showed you guys in the videos. Put the currency. Our AUD is not here. Click the plus sign, search for AUD, click on it. Click the plus sign, click the dollar sign, select AUD. How many? Nah, that's a mistake. We have to close it. how many lots did we see that we needed? 0.02 lots. 0.02 on AUD. Our stop loss. What was our stop loss? The end of the zone is your stop loss. So you can just find this horizontal ray to just bring it to the end of that block that you marked, so that you know your stop loss. So your stop loss is what one number you see in there, the red line, 0.61147. 0.61147, and the pips is 26 pips. 0.61147 is your stop loss. So let's say you just want to catch 1 to 2. 1 to 2 means that you want to make times 2 of what you are risking. So 26 times 2 is what? 26 times 2 is 52. So your TP will be at 52 pips. Where is 52 pips? Use your measure to check where 52 pips. So 52 pips is around here, the green line. So your stop loss is the red line. You're risking 1 to 2. You want to make double of what we have 1 to 2, 1 to 3, and the rest. But let's just stick to 1 to 2. So you're targeting to make a double of what you're risking. So your stop loss is the red one and your TP is the green one. So let's put it in our 85. Stop loss 0.61147. SL 0.61147. Our TP is what? TP 0.61938. 0.61938. So you now click on buy or sell, whether you're buying or you're selling. If it's buying or selling, you just click on it and your trade will start moving. You also have different types of entries. You can set your buy limit, sell limit, but I'm not going to teach all that here. This is just like a basic free one. So the next couple of videos, we're going to be talking about strategies. See you guys in the next video.